Assalamu alaikum everyone. Today in this video we are going to discuss about UAE Corporate Tax and IFRS applicability on gold held by the jewelers in UAE. As you know, what price we should value gold for the corporate tax purpose is too much tricky point, and everybody is more confused about at what value we should value our gold because gold prices increase too much, and due to that unrealized profit is coming in our financials, profit and loss account huge, and we have not earned that profit. Why we should pay corporate tax on that unearned part of profit on the gold value increased? So what IFRS say about it, what corporate tax say about it, how we can utilize all those available options so that we can minimize our corporate tax liability, and what is the right treatment as per our available options. So let's start to understand the gold valuation for the UAE business owners in UAE. Let's begin. Scenario 1 is that gold purchase for trading. Okay. IFRS applicable is IFRS IAS 2 measured at fair value less cost to sell. Okay. Corporate tax position is that gain included in the accounting profit, gain recorded in the accounting profit, taxable under Article 20, sub-article number 2. Realization basis available, eligible or not eligible, as this is the revenue accounts. Realizable basis only available if assets or things are held under a capital account. Okay. So tax impact, taxable on unrealized gain. If gold coming under our inventory, then we have to value at a fair value, market value, mean to say. Okay, then it will be taxable. Okay, now come to the scenario number 2. Owners contribute gold to be sold by the businesses. Owner is putting his gold as a capital. Okay, and in that case what will happen? Once gold is given to the business, they will treat it as an inventory. So it will be the inventory will be valued at a market value. Okay, but offset by the owner current account liability account, because business has to return gold to the owner also. Okay, so once inventory value increased but liability is there, so value decrease, so net effect will be offset, everything will be offset, no extra burden. Realization basis is not available as not held under the capital account. Inventory is held under a revenue account, so realization basis is not available. Okay. Owner gold must be returned in gold, not cash. Scenario number 3. Liability is commodity linked, valued at a fair value as per IFRS 9. Okay. Revaluation loss goes to the P&L. Okay, and reduce our taxable profit. Okay, same treatment as point number 2. Realization basis is also not available. Offset inventory gain in same P&L. Okay, so net effect will be 0 here as well. Owner gold mean to be held, not for the sold. Okay, owner is giving gold in the business to be held as a capital, not for the trading purpose. Okay, can be treated as a non-current asset or investment holding as per IFRS. Okay, non-current asset. So non-current, so realization basis will be available under the corporate tax. If classified as a capital account as per UAE Corporate Tax, if classified as a capital account, eligible for realization basis, eligible for realization basis, not taxable until actual sale. Net impact, tax impact is that not taxable until actual sale. Right, clear? Owner gold recorded as a capital contribution, equity. Okay, gold becomes as a part of equity, not an inventory. Okay, no gain in P&L, no taxable income. Realization basis is available, right? And not taxable until we are actual sale happening here. actual sale whatsoever. If we are opening holding company, special purpose vehicle company created to hold gold held outside the trading entity in another company we are holding. Special purpose vehicle company can elect realization basis, okay, because they are holding as a equal capital account, okay. So realization basis is available to that SPV, not taxable unless sold, right? Not taxable unless sold. Right, now come to the next point. Business sells gold before year end, profit is realized. We sold our gold before year end, so profit is realized, taxable as per regular rules. No need for this one because gold is already sold, so tax on the this one, okay. Let's go to the next point. Use cost model instead of fair valuation if eligible. We in the gold industry, what we can do in the valuation of the inventory, there is two method available. One is that primary method is that value at a cost or net realizable value, whichever is less, okay. We can value at that part also, but as it is a commodity based, and if IAS 2.3 is applicable, so we need to value at a measured at a fair value, okay. But if we can use this value, we can value gold at a cost or net realizable value, whichever is less, then this will be the applicable. Use cost base instead of fair valuation. Allowed only if not acting as a broker or dealer. We are not a broker or dealer, then this method is applicable. Reduced unrealized gain, because if we are not selling gold, okay, then we no need to book the profit, even we no need to book value at a fair value, okay. If approved accounting and justified, then only, okay. So no tax there, okay. Liability not valued, but inventory is revalued. We are in scenario number 9. Liability we are not going to value, but inventory we are going to value. Incomplete accounting, this is not a right accounting. Gain is taxable, but loss not recognized, okay. If owner is giving his gold in the company as a loan, then and we are not revaluing our liability in that case. As per CT, gain is taxable but loss not recognized. So realization basis is not available. Okay, and our stated price, this is going to be loss us in the corporate tax point of view. Okay, let's go to the next slide. What happened? Now come to the practical recommendation. What recommendation I want to give to you all? Action: clearly document ownership and purpose of gold trading versus investment. Why? Determine realization basis eligibility. Determine realization basis eligibility. Okay. Point number 2. Create owner's current account as a gold based liability account. Create owner's liability account, current account, whatsoever name you call. Allow fair value revaluation of liability. Okay. Apply consistent fair value accounting for both inventory and liability. If owner is putting gold in the business, that is the liability for the business, and that is going to the stock, so that is the inventory for the business. Okay. Avoid tax on artificial unrealized profit. Now consider special purpose vehicle structure for the long term gold holding. Keep appreciation untaxed until realized. Okay. Next point, this one. Discuss with the auditor to justify inventory cost model if applicable, whether you want to adopt a cost basis or fair valuation basis. Okay. can avoid fair value volatility and tax also. Sell inventory just before year end if price is high, trigger real gain, not paper profit. Okay, this will be the real gain then if price is high. If you, this is not a recommendation, this might be not a right way of doing the business in the UAE. Okay, if you want you can sell, otherwise no need to sell. Okay, maintain all contracts and support for treatment, audit readiness, protect against FTA challenges, maintain all the papers, all working papers, so that you can justify this kind of things in front of the authorities. Right, thank you. Let's go to the next page. Reference summary. This is all the references of the IFRS and UAE Corporate Tax laws articles. You can refer all those things. Okay. Now, bottom line: if gold is used as in trading, it is an inventory and fair value gain are taxable. If there is a liability to return the gold to the owner or somebody else, value it as value, revalue it, loss offset the gains. If gold is not meant for sale or held in a separate entity, you may qualify for the realization basis. Okay, for the deferment of the tax. Accurate classification and accounting is equal to correct taxation. Right? Thank you very much all. If you have any doubts, you can note down my number 971 58 56 21 786. Okay, don't try to call me, just send me message over WhatsApp. Okay, once I get a time I will revert you on the WhatsApp only. Don't call me unless and until it's a very urgent matter. Thank you very much everyone, once again thank you.